Youssef, investors looking for paths here because industrials obviously getting buffeted by tariff worries. You got the banks not doing well, I mean, at least over the last week or two on the curve. And now you got tech, you got Oracle here, you got Red Hat there. Are you seeing the number of options dwindle?
Well, look, I'll focus primarily on internet and digital media names because those are the ones we primarily cover. And I can tell you, the trade worries are not as much of a problem for internet names. Regulation is more of a problem, and obviously the Supreme Court decision yesterday could also be another concern that investors will have to deal with. But generally, fundamentally, this group continues to do extremely well. Channel checks intra-quarter would indicate that whether you're talking about online advertising trends or e-commerce trends, we continue to see what the trends we saw throughout Q1. And Q1, we actually saw an acceleration of growth. So far, so good.
Brent, I don't get why people are so concerned about the Supreme Court ruling's effect on retail. The companies that are publicly traded seem to me to be largely set up to deal with this sort of thing. And plus, there's new technology that several of them are developing that this creates demand for. What am I missing?
I agree with you, John. I don't think this is a big issue. I think the shift to e-commerce is inevitable. The convenience factor still is the biggest tailwind for consumers in the selection, and that's going to take a lead over any changes in taxes. Remember, everyone's going to have a level playing field. So when you look at Amazon, they have a software business with AWS built in. So that can shelter any storm and incremental costs. Target, Walmart, others that are in the industry can't shelter that storm because they don't have that recurring visibility in that software business baked in. So we think others are going to be more exposed potentially to the cost factor, but Amazon, from our perspective, is well insulated.
What happens if the U.S. Postal Service gets restructured, Brent? Does that impact Amazon?
We think, again, given that Amazon has so many different divisions, that if they actually raise prices, and I think everyone is anticipating that the services to actually raise prices, there's other ways that Amazon can hit different release valves to make up for these expenses that they would have to pay. You've seen them, they have a mantra of failing fast. So they're in so many businesses, they could just shut down those businesses. One example, is education. They've tinkered with it. We think they want to be in it, but they're actually shutting down my kids' education platform called 10 Marks because they don't feel like they're getting the return. So there's areas that they can fail fast, reallocate costs, and I think, again, that's an overhang for all the e-commerce vendors that they're going to face. FedEx, UPS, we think ultimately would end up raising rates as well alongside the United States Postal Service.
Youssef, I think you and Brent have holds on Snap and Twitter after quite an amazing run in social names over the last couple of weeks, and some other highly shorted names, highly leveraged names, and tech and beyond. I'm just wondering whether you think that trade is coming to an end.
To a certain degree, I think it is. So Twitter, we frankly just missed it, didn't upgrade it fast enough. What we've been hearing from ad agencies is that the Twitter video ad platform is resonating quite a bit with advertisers. I think that's what you're seeing reflected in the stock. We're not hearing much of that enthusiasm about Snap, unfortunately, and that's why I think Snap is, where it is deservedly. We think Twitter's run, unless they blow the quarter out, which frankly I don't necessarily expect, I think the stock comes back in.
Brent, what is your theory? What is your thesis, maybe, on what's happening in omni-channel retail right now? This idea of blending the real world and the digital world. We're seeing that more and more across the regulatory environment, and also what companies are doing acquisition-wise. Trying to deal with things like taxes, Avalara, Adobe getting Magento. What do you think is really happening here, and what strategically is it going to take for companies to succeed?
I mean, I think it's a mixture. I think just look at the success this year of, Restoration Hardware and Williams-Sonoma, right? They have both strategies, and I think both those stocks have done very well because I think investors have woken up to, hey, that these businesses aren't going away because of Amazon. So we think that it's a mixture. You want to be able to go to Amazon and order things, but you also want to be able to walk into Whole Foods and pick something up for your family on a short-term basis. So I think that blending's happening. As it relates to what Adobe's doing, we think Adobe was late. Salesforce.com was early with Demandware. So Adobe's playing catch-up. This is a long overdue acquisition that they needed in kind of last mile for you're looking for something you actually want to transact. So we think Adobe's now into the game. It's a wonderful management team. We think it's a great stock from here and grinds higher. So we're pretty positive about what they're doing to capture that omni-channel opportunity.
Before we let you both go, Youssef, we've seen FANG continue to power higher with many of those names near or at record highs just even earlier this week. How much higher can they go?
Well, I mean, not all FANGs are created equal. You can look at a Facebook or a Google, and they're actually trading at very, very reasonable levels. In fact, below their expected growth rate, somewhere around 10 or 12 times EBITDA, 20 to 25 times PE. And Netflix or an Amazon are growing obviously a little faster, but they're trading at substantially higher multiples. That said, I think generally we believe that valuations are still reasonable. We believe that over time, as you look at these businesses over the next 12 to 18 months, 2 years, not necessarily the next 3 or 6 months, there is still a fair amount of upside, in large part because there's scarcity value for large cap growth, and that's what you're seeing reflected.
I think a lot of investors know exactly what you mean. Youssef, Brent, have a good weekend. Thank you, guys.
Thank you.
You too.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.